So what we're looking at right here is the main dashboard or the main overview on Stelor on an example condo. You can see it just has some basic starting balance, expected contributions, whether there's an expected special assessment this year, and then the total expenditures for this year as well. Down here, some basic KPIs on basically how much has been contributed. So the revenue budget, how much has been spent out of the reserve so far this year. So the expense budget, what's the projected annual increase, and then what's your risk of special assessment. And in this case, you can see it goes negative, and there's a lot of negative bank balances predicted over the next 30 years. So you have a very high assessment risk. So what you can do with this then is this is just the current reserve fund and the recommended contributions in that reserve fund. However, it's had updates to the expenditures or the capital replacement expenditures that are coming, which have put it into a negative balance. And most of that's related to high inflation over the last 4 years. That's put pretty much every reserve fund site that's been written in the last 5 years is going to be probably inaccurate because they would have been predicting something like 3 to 4% inflation. And as we all know, multifamily construction saw, more like 10 to 12% year over year inflation over that period of time. And so if you click this button anyways, you can see, all right, this has a bunch of negative balances over the next 30 years. What would we have to do to increase fees, avoid special assessment, and how would that look in order to bring all these bank balances back to positive? And so it reruns that forecast. And in this case, it says, well, all right, from 2024 to 2026, you would need to increase total contribution by $312,000 total for the condominium. And if you highlight down here, you can see that the current contribution is 342. So you would effectively have to double your reserve fund contribution in 2024 through 2026 in order to avoid special assessment. That breaks down on an average. This doesn't include unit factor, but just a rough average for each unit of $2,371 per unit per year to avoid that. Which then makes you wonder, like, would a special assessment actually be better than increasing our fees by that much? You might want to just do special assessments of, $2,500 per unit each of the next 3 years and not increase fees as drastically as we have here. But it's just a tool. So you're kind of seeing, all right, those are the additional contributions required. This next button is the special assessment button. And so it will rerun all these forecasts with what would we have to special assess each year and what would that look like? And it has the ability to kind of group as necessary several years to make it a little bit more clear. So it's not like you're special assessing every single year. So you can see in 2026, it would recommend a $5,600 special assessment, which would generate $750,000 total for the condominium for those capital replacements. Then in 2027, it's a little bit less. And then you don't have any further special assessments until 2043. Overall, if you wanted to special assess everything right up front rate today, it would be a little less than $10,000 per unit, which would be $1.25 million to cover this. And then the last thing that we have is just what would it look like if we took a loan out today? And it uses just the approximate 20-year loan at 8% that CWB currently offers to condo corps. And you can see, so it recommends a $1.3 million loan at 8% for 20 years. And that would result in $134,000 per year in order to service that loan, which would mean everyone's fees would have to increase by $1,019 for the next 20 years. So if you take a look at that, it's actually not that a good idea to take out the loan. You're better off to do a couple special assessments and maybe look into those contribution increases. So anyways, that's just the general overview, gives you a few ideas on what's there. You scroll down, it'll tell you what the expenditures are coming up in the next year and what the actual costs or budgeted costs were for last year, and then going forward, it just displays that. Over here is then the planning section. So this is where you would do kind of the property manager and the condo board could sit down probably just once or twice a year to discuss, all right, what are all of our capital replacement items that are budgeted for this year? What are they and what are the costs? Which ones do we want to do? And which ones do we not? And so it just takes, the next 10 years of expenditures and lays them all out as what they're budgeted for. This comes right from the reserve fund study, but it just puts it in a nice, easy to look at, nice, easy way to discuss format. And then gives you the ability to take a look at it and see, all right, well, we have $300,000 for caulking this year and next year planned. We have $412,000 for interior painting this year. And then we have a reserve fund cost included in there. Which of these are we going to do? Are we actually going to take on these capital replacement projects and spend this money? Or are we going to push them off? Or are there other items on here that we might want to bring forward? And so in this case, let's say, all right, well, caulking's fine. Let's move that one forward. We're not going to do that this year or next year. And so move that forward twice just by clicking that arrow. And so you can see now caulking for the next 2 years shows up in 2026 and 2027 rather than 2024 and 2025. But we do want to do some painting. Interior paint is $412,000 this year. We want to do that. And while we're at it, we're going to also do the exterior painting project. So we're going to pull that one backwards and it's right here. And then finally, we actually went out and got some quotes for exterior painting and $50,000. That's actually pretty low for what we think it's going to cost. We got quotes for $82,000. And so you would just click that and it quickly reruns it and creates your budget and applies it out. So this is just your budgeting tool to kind of have those discussions, property manager, condo board, and work through it. The next thing would be to do your 1 year look back, look at what you budgeted and what you actually spent out of the reserve fund. This is where rent manager integration is going to be really exciting because we are going to be able to just run an API, which will pull the general ledger from the reserve account and just bring it in and apply it to these revenue and expenses and update them automatically. So if you were to do it manually, which is how we still have to, you would just click in here on the update financials, and then you would click the revenue section and update with actuals. And this is just your section where you can update with actuals. Or if you wanted to update the expenses, then again, you can click here and update with actuals. So again, these actual numbers. These are the ones that will pull in with that integration with Rent Manager and hopefully in the future, our integration with Town Square. And then once you've updated all that stuff, then we have our report section, which just allows you to download your reserve fund plan and your annual report, which are typically AGM documents that you would want to share as part of your AGM package, maybe at the AGM potentially, just briefly, with the actual condo owners then. And so I'll just show you quickly what that looks like. It just pulls all that data, pulls in all the work that you've done as you've been working with the property manager and as a board, and just pulls it all in and creates this kind of nice, easy, standardized report. It shows a number of funding models, and then displays out all the budgets for the next 5 years for all the components. And the last function that we have in here is Stelor Insurance. And so basically, because we have a complete inventory of all of the commonly owned property in your condominium, we know what type of material, well, we know that complete inventory, we know the type of material, we know the quantity of material, we know how much it's expected to cost to replace, we know what year it's expected to be replaced, we know a lot of the financials, all of that information. We typically also take down also some of the appraisal information, the certificate of insurance information, and we've started to fill some of those other gaps too with with some of those questions like how far are you from the nearest fire station, and how far apart are the buildings, things like that that are critical for insurance renewals and I guess also new insurance. And so it just automatically pulls in those 104 questions and updates them because they're already in our back end, already all indexed. And then it's ready to be sent off to your insurance provider, your preferred insurance provider, which I think in most cases for Associated is BFL. And then we have a couple other insurance providers that are also options, I guess, that you can look at. However, I know that the BFL probably has pricing and programming that with Magnum York and Associa and Sierra that can't be beat. So it would just be a nice package of data with all the files that can be very easily sent off to your insurance provider.